China is urging central banks in the West not to hike interest rates too fast to fight inflation as it goes in the other direction to battle a sharp economic slowdown. Chinese President Xi Jinping on Monday called on major world economies to spur growth by coordinating their policies as the world continues to pull itself out of the turmoil caused by the coronavirus pandemic. The global industrial chains and supply chains have been disrupted. Commodity prices continue to rise. Energy supply remains tight. These risks compound one another and heighten the uncertainty about economic recovery, Xi told attendees of the 2022 World Economic Forum during a speech delivered online. He warned against the effects of raising interest rates too much too quickly, saying that such measures could threaten global financial stability. If major economies slam on the brakes or take a U-turn in their monetary policies, there would be serious negative spillovers, Xi said. They would present challenges to global economic and financial stability, and developing countries would bear the brunt of it. Many global policymakers are grappling with rising inflationary pressure, and starting to end their pandemic-era stimulus plans. The Federal Reserve signaled last month it could raise interest rates 3 times in 2022, while the European Central Bank announced it would end its crisis-era bond buying program in March. The Bank of England increased interest rates last month, becoming the first major bank to do so since the pandemic began. Central banks in Eastern Europe and Latin America have also raised interest rates aggressively to cool inflation. But China, the only major economy to grow in 2020, is taking a different tack as its economy slows and it grapples with the challenges of maintaining momentum while holding firm to its zero-COVID strategy, a strict policy of locking down areas to prevent outbreaks that has isolated the country from much of the world. The People's Bank of China has been loosening its purse strings to keep things running smoothly. On Monday, the central bank cut a key interest rate for the first time since April 2020. Last month, it slashed both the reserve requirement ratio, which determines how much cash banks must hold in reserve, and the loan prime rate, a rate at which commercial banks lend to their best customers, and which serves as the benchmark rate for other loans. Beijing's latest measures came as the country reported that its economy expanded 8.1% in 2020.